G'day folks, welcome back to another update for natural gas ETFs. Now the daily charts turn bearish. We'll go through the charts shortly, and that's also going to include some back testing. Before we go any further, make sure you hit that like and subscribe button to support the channel. In terms of the outlook as of today, March 21st, production growth, US natural gas production is projected to reach 105.2 billion cubic feet per day in 2025, driven by increased demand from liquefied natural gas, exports and AI data centres. Price forecast: after holding support at 398, April natural gas futures formed a triple bottom, confirmed by a close above 421, suggesting potential bullish momentum. In terms of bullish indicators, surging energy requirements from AI data centres are expected to significantly boost natural gas consumption. Expanding LNG demand is anticipated to maintain high natural gas usage. Bearish indicators: insufficient pipeline infrastructure may hinder production growth, leading to delays and increased costs. Milder weather forecasts and reduced demand have recently led to a 3% decline in US natural gas futures. In terms of AI data processing increasing energy consumption, the rapid adoption of AI technologies is significantly increasing data center power consumption, and Goldman Sachs research estimates that data center power demand will grow by 160% by 2030, potentially raising their share of global power consumption from 1.2 to 3 to 4%. This surge underscores the critical role of natural gas in meeting the escalating energy requirements of AI infrastructure. So we always started looking at the long-term trends, and here we've got the monthly, the weekly and the daily. So first off, on the monthly, we're still bullish with the CCI above its moving averages, likewise the price. On the weekly, likewise it's bullish on both the price and the CCI, although the CCI is starting to pull back towards those moving averages. You can see that more clearly on the daily. We hit this resistance up here at 49.30 and it's currently resting on this minor support at 39.45. But notice the CCI is broken below the moving averages, as so is the price. So that's a bearish momentum at the moment on the daily chart. Now looking at the intraday charts for any micro moves, we're looking for any divergence. We had a little bullish divergence back here before our last video. So higher lows on the CCI versus lower lows on the price. That actually bounced and hit our minimum target range. And that target range is a 23.38% level. Just very quickly draw that for you. So we take that Fibonacci range, and that's at 23.38%. So it's hit that range as marked by that rectangle. We had a bearish divergence back here, lower highs on the CCI versus higher highs on the price. And if I remove that, that actually broke down and hit that 23.38% level. This one, it went well below that and almost reached, I think, around about the 61%. Currently, there's no divergence to notice on the 1 hour chart. That CCI and the price is still very strongly bearish, with no sign yet of a pullback even as we record. In terms of backtesting, what we have here is the stop loss approach and the average down approach. And I've marked the backtesting beginning with a short positioning from that point on the daily. So we go in the direction of the daily when the CCI breaks below the moving average range. And that, you can see that's based on that level there, just when it's about to break below that on the price chart as well. You can see there the stop loss approached. Lost a few points or a few dollars back there when it started declining, with the stops being stopped out. The average down approach, average down to the maximum of 15 contracts at that point, and another 15 contracts there. So the end result, had you stayed in the trade according to the daily, and you'd still be in a trade today, the stop loss approach has generated 17.95, and the baseline is 100,000, but it would have generated 1,700. In fact, it's just ticked up to 1,815, and the average down approach has generated 8,105. Again, stay to the end of the video to see the trading parameters for both the stop loss and the average down parameters. So for BOIL on the monthly, you can see there on the price chart it's still bearish, although it's actually approaching the moving average range. There's no CCI for it drawn, but I would still consider that a bearish momentum on the monthly. On the weekly, the price is broken above that moving average range, giving us a bullish signal, and that's in line with this bullish move on the CCI as well. So higher lows on the CCI, and that's been a bullish divergence for some time, since the start of 2023, and it's finally broken quite decisively above that moving average range on the price, and you would have started taking long positions when that reached a new high back there on the weekly. On the daily, you can see there it's hit this resistance at 107.11 and it's pushed back from there, and it's now currently broken below the moving average range on the price, but also broken below the CCI moving averages. Notice as well that was a bearish divergence versus higher highs on the price, and that actually broke down and broke through that 23.38% level, and it's currently still sitting there around a 33% level. but still bearish on the daily. If we go to the 1 hour chart, again we had a different bearish divergence here on a 1 hour chart that actually broke down. And where's that reach? Let me just draw a Fibonacci on that one. I haven't drawn a target for it. So you would have measured it from that high to that low, and the minimum level that we expected it to retrace would have been that 38% level. You can see there it's still sort of hovering just below that 38% level, almost at the 50% level. And notice on the hourly it's still bearish, still dropping below the moving averages of both the price and the CCI. So looking at the back testing for BOIL, and again I've marked it here on the program, beginning at trading when the CCI and the price are broken below the moving average range, and that's marked by this period back here. The stop loss approach, and you'd still be in a trade today based on the daily. The stop loss approach has generated $90, and we're investing $1,000 per contract every time, or number of shares every time you enter these. So it's returned $90 so far, versus the average down approach has generated 158. Now this one hasn't averaged down yet. It's still been maintaining that level, but notice it's been keeping it and not stopping it out. The reason you've got a bit less in terms of profitability is because you've been stopped out a couple of times here during the stop loss approach. So for KOLD, we've got the monthly broken below the moving average range, which is giving us bearish momentum. No CCI for it on the monthly. On the weekly, it's already been bearish now for some time, and it's still very strongly bearish, with a slight pullback on the CCI on the weekly. And on the daily, it's actually finally broken above the CCI moving averages, with the price also bouncing after this bullish divergence, higher lows on the CCI versus lower lows on the price, and this actually bounced. Now I've drawn a target range for this with the Fibonacci range. Let me just draw that again. Fibonacci range going from that low to that high, and that's at 38% level. So assuming this will keep rising and the price keeps rising, we expect it to reach this area. Now, I don't trade these in isolation. I generally only go with the direction of the higher time frame. So you could actually trade it, but again, just be very cautious and get ready to stop it out as soon as this starts breaking down below that moving average range on the daily CCI. Now, if we go to the 1 hour chart, if you're trading on the intraday, again, taking bullish movements only, but again, I'd wait for this to break above the moving average range to be more confident. I'll give you a better probability. But as you can see here, on the hourly, the CCI is broken above, and so is the price, and you could have taken those trades, and I'll go through the back testing in a minute. But again, we had another bullish divergence here, which is independent from the daily versus lower lows on the price, and that's actually bounced. Now I'm showing you the back testing here for KOLD on the 1 hour time frame, buying those shares. Beginning from that point there when the CCI broke above, but again I'm showing you what, just to avoid, I wouldn't be going long at that point there, because notice the price is still below the moving averages. This could always just hit that moving average and then bounce further to the downside like it did here. But anyway, I've just shown you the back test beginning from that point there on the daily. So the stop loss approach, had you entered and exited based on the stop loss approach, you would have made a couple of little gains, but totally you would have made, investing $1,000 in each trade, you would have made $60. The average down approach, you would have averaged down once and you would have made $210. So again, I'm just showing you it's probably not a good idea, but in this case it's worked out on both of those methods. I prefer to wait for that to break above, convincingly above the price as well as the CCI. And here's the back testing to go short. So again, this back testing begins from that period there on the daily when it broke below the price, below the moving averages, and also the CCI. You can see there is a lot more stability in that decline, and that's indicated by this approach here. Now here I've got a couple of stops here. You would have got stopped out. You would have stopped and taken your profits at each of those X's, and that's marked on the daily where that moving average was penetrated by the CCI. So again, you would have closed it out at that point there, then re-entered it when it dropped again at that point on the daily, and then re-entered it, stopped it there and re-entered it there, and that's indicated by these points. But overall, up until, let's say, to that point there, on that point, you would have generated 295 on a stop loss approach and 346 on the average down. Even though you entered a few contracts there, you would have taken your money off the table and been happy with that result. Again, you could have actually gone short again from that point, but you would have started noticing this bullish move on the CCI So just be careful of, always read the divergence as well. And for UNG on the monthly, you can see there it's just broken above, very briefly above the moving average of the price chart. The CCI has been bullish above that very narrow moving average range, so slight bullish movement on the monthly. On the weekly, it has been bullish now for a number of weeks. Notice we had this bullish divergence, and that's actually played out and broken higher through those moving averages. And on the daily, it's hit this resistance at 24.13 and pulling back. We had another bearish divergence here, and it's broken through that 23.38% level. It's currently sitting around the 38% level of a retrace. Now that's currently both below the moving average of the price chart, but also below the moving average of the CCI. And if we go to the intraday chart, again taking short trades only, and you would have started taking short trades from that period on the daily when it broke below that moving average range of the price and also the CCI, and that's indicated back here. So you would have taken some of these short trades, and I'll go through that. But notice here it's actually bouncing off this diagonal ascending trend line. It's been gravitating towards that for some time, and it's finally broken to the downside. And we did have if you extended this bearish divergence to that high, oops, let me just move that there. That would have been a readjusted Fibonacci retrace from that high down to that low. And you can see there it's broken through that 38% level. It's currently sitting at that 38% level. So again, this could bounce from there back towards this diagonal trend line or even higher. There's a slight move to the upside on the CCI, which is a slight positive if you want it to go long. But again, don't go long until we see the daily also break higher on the CCI and the price chart. So for UNG on the back testing, I've started it back here on the daily when it broke below the CCI and also the price moving averages from that dotted line. That's indicated by this. Now you'll notice here on the stop loss approach, you would have entered a few trades. They weren't profitable. You've dropped below the 100,000 baseline, so you would have been down about $50. And on the average down approach, your break even 100,000 is your baseline, and you're sitting at 100,000 at the moment. But notice the price and the CCI are still dropping ever so slightly. So again, fresh entries for UNG to go short. So here are the back testing or trading parameters. So if you're trading on the 1 hour time frame, you invest per trade 1 contract, the first contract entered, and you average down limit of 15 contracts. So basically the contract entries, the first one is 1 contract, next lot is 3. You've got a total of 3 contracts now running. Add another 4, you've got a contract, 7 contracts running. Add another 8, and then you've got a final of 15 contracts maxed. And every time you average down, you make sure it drops by at least 0.005% for a 1 hour trade or contract parameter. If you're trading on the daily, the average down is 5% decline. Now, trading shares is very similar. Invest per trade $1,000 per trade. So you invest first $1,000, next lot is $3,000, next is $7,000, and finally you got the max of $15,000. And again, average down by 5% if you're trading on the daily time frame, and take profit of 3%. If you want to follow the traditional stop loss strategy for trading CFDs on the 1 hour time frame, you invest 1 contract per trade, take profit of 0.003% or 3% for a daily trade if you're trading on the daily time frame, and a stop loss is when the CCI 150 turns into the moving averages. Likewise, if you're trading shares, if you're trading on the daily time frame, invest per trade $1,000, take profit is 3%, and again, stop loss when the CCI 150 turns into the moving averages. Obviously, you can invest more than $1,000 in any of these trades, but you've got to be very careful of the your money management and your account balance. And I've limited it to 3% take profit on the daily and 0.003, the equivalent for the 1 hour time frame, because I found if you make it too high, in other words, if you aim for a 5 or a 10% gain, often you're a lot longer in the trade than you really expected, and it just gives you a lot more turnover when you're the smaller take profit return.
To support the channel, hit that like and subscribe button, and for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page where we look at weekly scans of bullish shares across various regions. Thanks for watching, and see you in next week's video.